Hi everyone, Mr. Prudhi. Today welcome you all for my fundamental analysis. In this video, I would like to discuss on one company that's in the tractor manufacturing. That company is known as Escorts Limited. So why I have taken Escorts for my fundamental analysis today is mainly because in the next, the monsoon is starting. If the monsoon is starting means the monsoon related companies is going to impact positively because of the good monsoon expected in the next 3 months. So the companies which will be impacted, the first is the tractor sectors, next is the fertilizer sectors, so next the agri businesses. First one, the tractor business will be impacted positively, the sales is going to go up when the monsoons are good. So because of that reason, so we are expecting this year also monsoons will be good. For that reason, I have taken this Escorts for my fundamental analysis as a pick for next 3 months. So watch the video till the end to get to know whether the stock price is attractive to enter at the current level and how does the valuations look in the current levels. I'll be discussing all those things in this video. Please watch this video till the end to get to know all the fundamental factor about this company. So firstly, I would like to start with the business of the company. So the first business is that Escorts Agri Machineries. Next one is the Escorts Construction Equipments. Next, third one is the Railway Product Divisions. So in that, the revenue breakup of these three businesses, the first business is the agri business, which contributes 77% of the revenues for the company. So next is the construction equipment manufacturing, it contributes revenue of 15% to the company. Next, the railway divisions product, which contributes 8% for the revenue of the company. So this is all revenue breakup. So the next important point is that the operating margin which the company is operating on these three businesses. So the first business is the agri machinery business, where the tractors will be manufacturing agri related machineries. The company Escorts will going to manufacture, which operating margin of this is going to play a very important role because the large chunk of the revenue will be contributed by the agri related business itself. So it's important to maintain the good operating margin. So in this, the Escorts Agri Machinery business, which the company is operating at the operating margin of 15.8%. The next is the construction equipment manufacturing. It is contributing only 4.8% operating margin. Since it is not a huge chunk of revenue which is coming to the company, so we need not to be bother about that. But it is a concern since the 15% of the revenue is coming, still it is operating at a 4.8% operating margin. So where the company manufacture in the construction equipment space, the backhoe loaders and the forklifts and other heavy vehicles in the construction space. So next is the Escorts railway equipment products, so which is operating at the operating margin of 14%. In this space, the company is manufacturing suspension system, couplers, next the friction and rubber materials, next the brake system. In these are all the parts which they are going to manufacture in the railway divisions product. So this is all about the business of the company. Next, let us look at about the story of the company. So when it comes to the story of the company was incorporated in the year of 1944 in Lahore. So with the name of Escorts Agents Limited, with having 1,200 touch point and sales point and outlets. In 1959, the company has converted into Public Limited. So in the 1961, the Escorts Limited has set up a manufacturing plant in Faridabad, collaboration with URSUS of Poland to manufacture tractors. In the 1961 itself, the company has made a joint venture with a Ford to manufacture Ford tractors in India. In 1977, the company has set up a R&D center in Faridabad. In 1980, the company has entered with the joint agreement with Yamaha company to manufacture Yamaha two-wheelers in India in the 2000th century. Before 2000th century, the Escorts was a manufacturer of the Yamaha company's two-wheelers in India. In the 1997, the company made a joint venture with New Holland and launched one new model called Farm Tractor in the tractor space. In 2001 and 2002, the Escorts sold their stakes in Yamaha of 26%. In 2012, the company has developed a most fuel efficient tractors, the tractor named as PowerTrack 425. So this is all about the story of the company. So currently, as of May 2020, the Escorts Limited, which occupies 11% market share in the tractor segments in India. So when in the listed players like VST Tillers and Mahindra stands 1, and next is the Escorts, next comes the VST Tillers. So when you compare all these three players, the second player is the Escorts, which has a good market share in the listed peers. So next, let us look at the shareholding pattern of the company. So when you come to the shareholding pattern of the company, the promoter is holding 36.59% in the stake in the company. So in the last quarters, the promoter has decreased their stakes by 4%. Next, the FIS is holding 23.59%. In the recent quarters, the FIS have been increased their stakes by 3%. Next, the DIS is holding 7.13% in the company. So in the recent quarters, the DIS domestic institutions have sold 2.5% in the company. The public is holding 30.31%, remain as usual. Next, others is holding 2.18%. So this is all about the shareholding pattern. Nothing much interesting which I found about in the shareholding pattern. One negative point is that the promoter has sold their stakes by 4%. So FIS have been increased their stakes because of the strong confidence about the company. So this is all about the shareholding pattern. So nextly, let us look at on the financial statement of the company. So when you come to the financial statement, firstly I would like to take you to the quarterly results. So in the last, from June quarter to March 2021 quarter, Q4 of FY21, where you can see the sales is significantly increasing from 1089 crores to 2229 crores, which is a good. So in the recent Q4 of FY21, where you can see the company has witnessed the record sales in overall, which has never witnessed in the overall lifetime of Escorts sales itself. So nextly, the operating margin also, it has been increased when you compare to the previous quarters and all. So it is operating at operating margin of 18%. So in the March 2021 period, so because of the inflation pressures, which the steel prices are more, because of that the raw material cost has been gone up, and that has been hit a margin of 3% in the Q4 of FY21. So nextly, coming to the profit after tax, the company profit also is significantly increasing. So when you compare that FY21 quarter 4 result with the FY20 quarter 4 result, where you can see the profits are doubled. So even the earning per share is also reporting at 20 rupees per share on an average by the last 3 quarters. So very good statement in the quarterly analysis. Next, let us look at on the annual statement. So and the annual statement also, the company is significantly increasing their sales from a last 2009. In 2014 onwards, the company has been sales have been stagnant. In the 2020 June onwards, because of the monsoon for food, the sales were picked up and the company's sales went very well despite of the COVID and all. Next, the profit also was improved because of the operating margin which they were operating has been increased. Actually, the earning per share, it was very notable point. In the March 2020, the earning per share was 38.53 rupees. See, in the March 2021, the earning per share is 64.3 rupees, which was very good. Almost the earning per share has been doubled. Because of that, share price also rallied from 800 levels to 1400 levels. So currently, the stock price is trading at 1176. So it has been corrected almost 25% in the last 3 months. So is it a correct time to look at? So I'll be discussing that with the financial ratios analysis. So when you look at the financial statement of the company, the financial statements looks good. So in the 2015 to 2020, almost 5 years, so the sales were stagnant, it was not increasing. In the present year FY21, the good sales has been increased, so which was a very positive thing for an investor perspective. Almost the profits are double, almost the earning per share has been doubled. So currently the stock price is trading at 1176. Is it a good time to accumulate? So let us look at on the financial ratios of the company. So the current stock price of the Escorts is 1176. So the debt to equity is 0.01. The debt which they are having in their book is 60.2 crore, which is a light, which is need not to be worried about it. So the PE ratio is 18.2. So which is usually trades the 5-year average PE of 29.2. When you compare to that, it is still trading 10 times lesser than the 5-year average PE. The return on equity is 21%. The operating margin is 16%, well good when you compare to the previous year and all. And next, the return on capital employed is also very good. It has been increased to 27.2%. So this is all about the financial ratios of the company. So next is the analyst report. All the analysts on this company are bullish with a target price on an average of 1485 rupees. So which is very good. All they have maintained buy rating on this company. Even my analysis also looking that the company stock price is going to go up in the next coming days, because one point is that the monsoons are very good. So since it is reflecting in the Mahindra and Mahindra stock price, so why the Escorts will not report good numbers in the next future? So not only me, many analysts also as expecting good numbers to be reported by the Escorts in the next June quarters and September quarters also. So lastly, final conclusion about the company which I have given already. So this is all about this video. In the next videos and all, I will be coming up with good fundamental analysis stocks. Please stay tuned, watch these videos and stay enjoyed. Happy investing. I will be coming up with new videos. Till then, bye bye.